Hi everybody, you're watching another episode of NinjaTrader Unplugged, sponsored by the good folks at Back to the Future Trading. That would be me. I want to talk to you about something that could really hurt you when you first start trading with any indicators, whether they're free NinjaTrader indicators or otherwise. And it's a very dangerous place to start out. And one of the things we end up having to do a lot is sort of rescue people who were taught bad things early on and reteach them healthier or good things. And by that I mean the following. You'll have a lot of educators or people out there that will convince you to look for reversal signals. Reversal signals in the sense of the trend is going one way, and they somehow try to convince you that along the way you can, with deft and expertise, pick the places where that full-on trend is just going to stop and magically go the other way. And this is how I was trained by the first person that I decided to give a shot with my education money. And I just want to alert you to some of the pitfalls for that. You'll see a lot of educators actually talk about double tops and double bottoms. And I want you, when you see that, to remember the ambulance, because there's a big problem with this. Many times, everything looks really great when an educator shows you a pattern. And they say, see here, look how beautiful a double top that looks. Or vice versa. They'll show a pattern like this and they'll say, this was just a beautiful double bottom. But over the course of the day, you really have, as you come into here, you really have no idea if it's going to be a double top or a double bottom. And everything looks good after the fact. And that's one of the greatest giant pitfalls there are with trying to pick tops and bottoms. Picking tops and bottoms is a fairly dangerous activity. And I want to share some of the things that traders I know who are able to do this, and it's a disproportionately small number of traders who are good at this. On average, I've found that about 60% of traders that are making money are trading with the trend. They don't look for double tops or double bottoms because you don't know until much after the fact that it happened. About 20% of traders that I know are trading counter trend, and they trade counter trend with many more indications than trend traders do. So for example, I want you to think of it this way, and I've got a good indicator here that I'm going to turn you loose with in a second that's free for you to use. It's a new indicator, and I think you'll like it. If you believe that a bottom is forming, if you see this historical pattern here and it's just starting to form, here's what many traders will use. Number one, they'll actually require there to be some form of a resistance level. They won't even consider taking a reversal pattern that is counter trend unless there's some kind of a resistance or a support level for that market to reflect off of. So you want to have that kind of a mentality if you're even crazy enough to look for double bottoms and double tops. So at the very least, number one, before you start taking that advice, make absolute sure you have some kind of resistance level. That can take the form of a floor trader pivot. It can take the form of a prior swing high or low. It can take the form of a volume profile area, an order flow, rejection area. There's 100 different things. Fibonacci clusters like the next gen program, the T3. There are a lot of different things you can use here. But if you just go in looking for a double bottom or a double top blind, you're going to be hurt way more often than you'd be pleased to have. The other thing you can use is some kind of a band. That also falls in the family of resistance. And there are a number of choices here that are free in your NinjaTrader. You can use a Bollinger Band. You can use a Keltner channel. You can use a polynomial regression channel. Any kind of volatility band that says, hey, when you're close to me, I usually bounce away. Or the market has moved a standard deviation away from the mean. So don't start looking for double bottoms or double tops until you have some kind of resistance level or volatility band in the area you're watching for those reversals to occur, because you're standing in front of a bus hoping that the trend will stop. And if there's not at least one element here underneath you, you're sort of asking for your account to get blown out over time. What's number two? Number two, once you have some kind of resistance level, is to look for some form of divergence. And so I have a free divergence indicator here that I'm going to give you in a moment. And what it's essentially doing is testing the value of an oscillator as price retests the resistive level or the double bottom here. So essentially what you're trying to see is the car coming into the wall initially hit it at 55 miles an hour, and then the second time the car smashed into the wall, it was only going 30 miles an hour. You want to see a decrease in the momentum of that move across that retest of the low or the high. And so that in reverse would kind of look like this. Resistive level, first test, reapproach, starts to curl over, and then your momentum indicator would tend to look like this. So you're coming into the wall at 55 miles an hour the first time. The second time you're coming into the wall at 30 miles an hour. Does that make sense? Okay. So you want to have at least two elements when you're trying to use one of these magical, mythical reversal patterns that are almost all the time counter trend. I think personally you should spend most of your time focused on trading this pullback in the direction of the trend. Like I said, over half of the traders I've met who are profitable don't look for reversal signals. And the ones that are trading these double tops and bottoms are using a number of supportive indicators to help them be convinced beyond an absolute reason of a doubt that it is in fact turning here. So let me show you what I put together here for you. There's our ambulance. This tool is taken from the NinjaTrader free indicator resource area. They have in their forums, they have an indicator here, and I'll show you what it's called. Divergence Spotter V3, the D3 V3 spotter. And what it's essentially doing is it's looking for divergence across any of these different indicators. I've got mine right now set to CCI, but the programmer was good enough to program all of these other oscillators here for us to reference for divergence. And then you can see I've got a Keltner channel. I actually have two of them, and I want to show you one of the ways I suggest you start to, if you're going to go down this dark path of picking tops and bottoms, which is pretty dangerous. And again, try to avoid anyone who's saying how to trade double bottoms or double tops. It's really hard in the beginning, especially if you're a new trader. But if you're going to go that route, you need to have a set of parameters to hold you to some mechanical standard. And so here's what I want to show you, and tell me if you think this will work. When you're looking here, you'll see that there are actual trigger arrows all along the way. And what the indicator is doing is it's essentially saying, here, when we came back and retested this area, the car was going slower. It went from 50 to 30. And here, when we went back and retested this area, the car was going slower. So it's marking the areas where there's divergence. It's marking the areas where there's some kind of divergence. So that was the second element I talked about a moment ago. But then I added these bands. And these are really good for you to start with if you're going to go down the dark road of double bottoms and double tops. Have something like this on your side. And here's what I suggest. if you're going to take a long entry here, and I've got this on a 5-range chart on the crude futures instrument, if you're going to trade this, put your stop at the next band down and put your target at the next band up. If you want to use a second contract, go for 2 bands above you. Does that make sense? If you're going to try to pick a double top, take the signal here, but put your stop at the next band. And then look for target 1 and target 2, 2 bands down. So this is sort of a healthier way to approach the double bottom, double top regime. Here's an example of a stop out. If you were going to go short here at that band, at this divergence point, you would have put your stop at that level and eventually been stopped out. So try to employ those same techniques I've taught in the other videos. Risk X to make 2X if possible. We can't really trade in the direction of the trend here because a double bottom, double top analysis is going counter to the market at any point in time. And then number 2, use an if-then statement. Okay, if-then statement is, if A, I see a divergence entry, which by default is a double top or a double bottom, then B, I put my stop at the next band away, and C, put my target 1 or hopefully 2 bands away from my entry. Then you can put things in an if-then statement. If-then statements are back-testable. If-then statements, when they happen in the future, you can act on them. Otherwise, if you're looking for double bottoms and double tops, you're going to constantly be saying, is this one? Is this one? And in a hard uptrend day, it's very easy to lose a huge chunk of your account because you weren't following an if-then statement. You didn't have multiple conditions that were very discrete, very mechanical, that you could follow. So enough about that. This template is going to be saved in our NinjaTrader Unplugged box, and I'm also going to be giving you the indicator again, which is the D3 Spotter V3. It's a divergence spotter taken from the NinjaTrader free indicators section from the forums where other programmers have made things for the community. It's absolutely free. You're welcome to it. And these are just standard Keltner channels taken straight out of your free NinjaTrader indicator list. Really good system, and I'm curious to see what you'll do with it once you get your hands on it. To get your free copy of the indicator as well as the copy of the template used to generate these signals, all you have to do is go to this link, backtothefuturetrading.com, that's us, /unplugged. Once you get there, all we ask is that you tell us who you are. Make sure you're not a robot or a spam bot. Give us your first name, your email address, and we'll be happy to send you a link to the Dropbox where all of the template files and the indicators are located. Today's date when you go to look for the template is August 17th, 2016, and it'll say D3 V3 Divergence, August 17th, 2016. If you'd like more information about what we do, who we are, and what we teach, in the upper right hand corner of the page you'll see a place called View the Demo. You don't have to do it. We're not forcing it on you, but if you want to learn a little bit more about what we believe the markets are and how they work, you're more than welcome to click on that and take advantage of our free demo video series as well. We are fanatics about NinjaTrader. We love them. We love the team. Everybody from Ray Dukes all the way down to the little guys at the desks that are helping people with their orders. If you haven't considered NinjaTrader as a valuable resource and asset in your trading goals and plans, please give them a holler. They would be happy to help you and talk about why they're one of, if not the best platforms and packages for trading futures or Forex that you can get your hands on. So we're grateful to be part of the family, and I hope you guys are too. I'm Michael with Back to the Future Trading. Stay tuned for our next video in a series of educational videos showing what you can do with free indicators straight out of the NinjaTrader indicator box. I'm Michael Leidick. Thanks again from all of our team here at Back to the Future Trading.